So Tom Lee just went on CNBC and he talked about the 3 stocks to buy right now in 2025 and become a millionaire. In this video, we're going to go through the entire clip because he also talked about tariffs. He talked about the overall market. He talked about where we're going as an economy. A lot to unpack from this, a lot of impact on your portfolio, some important stuff. But as always, in my videos, the bottom line comes first. I don't hold you, my viewers, hostage, which means don't click nothing. Don't smash nothing. Don't buy nothing. Here is the bottom line first. The 3 categories Tom Lee recommends right now are, by no particular order, Bitcoin, financial services, small caps, and the top 10 stocks are Palantir, Nvidia, Palo Network, GE, Oracle, Arista, Emerson, Costco, and Netflix. The whole list will be below in the description, so you don't have to stay for the entire video if all you needed is that list. I'm not going to hold you until the middle of the video so you can get the answer. That's it. You got stuff to do. You got places to go. Go right ahead. No problem at all. But I do advise you, and at this point it is advice, to stay and listen to what Tom Lee is saying. Although I'm not a financial advisor, not your financial advisor, and this is not financial advice. But I do want you to listen to what this man is saying in this CNBC interview because he dove deep into a lot of stuff that have a direct impact on your portfolio in the short, medium, and long term. And a lot of what he said has massive value. So please spend the next 10 minutes with me. We will watch the clip first, then I'll offer my analysis, my strategy at the end, and then we will go our each separate merry way. But first of all, we gotta watch the clip. Hit it.
You know, it does seem like a pattern in 2025 as markets sort of take a hit on Fridays and maybe panic Monday. So I don't know if that's going to be the case. To me, I think the inflation headlines from UMich they're not great to see, but also I think that they are messed, or there's a political component to this because if you break that down between Democrats who see 5% inflation and Republicans at 0, the blend is actually pushing this number up, but to me, it just gets messy around elections. Tariffs are a reason to be uncertain, but so far, I think if I looked at how markets reacted, I think they've actually taken them in stride.
I mean, your biggest takeaway thus far, you say, is that the market's proving resilient, which, I mean, let's be honest, too. Since the start of this bull market, it's been one heck of a resilient market. It's been able to deal with almost anything thrown in its face. You've had a couple of panic moments. Monday, off of the tariff news, last August, with the unwind of the carry trade, and then we just continue to set new highs.
That's right. And I think in 2025, a lot of investors thought maybe the playbook would change because we just put 20% years behind us. But I think with January being up 2.7%, and I think these sell-offs being bought, it does feel like the same market that we had last year. The news that we've seen on tariffs, they've had more bark than bite, meaning they've proven to be opportunities for investors to buy.
What would you buy?
Well, the big news this week in our minds is the ISM moved back above 50. That really does point to earnings dispersion improving. So I like industrials, the financials. I mean, the small caps, which have been, not a great outperformer yet, but we still think small caps are going to do well this year. A good earnings season so far. The Mag 7 as a group hasn't been great. In fact, they've been a drag on the S&P this year. So part of it is it's telling me I think a lot of good news is baked into some of these names, and especially with CapEx going up. But it doesn't mean I don't think they're market performers. I just think the outperformance this year comes from financial, small caps, industrial. Well, and that's a relative term, right? Because on an absolute basis, these companies are growing far faster than the S&P. But from a what's priced into the stocks, clearly it wasn't a market surprise. That's why year to date they haven't been great. But to me, the key drivers for why you want to own the Mag 7 haven't changed.
So in the beginning of this clip, Tom Lee makes a very interesting observation. He says, look, folks, 2025 is a bit odd. Lots and lots of quick panic, knee-jerk reaction, and then almost an immediate correction back upwards. It's very different than 2023 and 2024 because there's a lot more volatility because people are basically afraid that the party is ending and they're basically picking up, pennies from the train tracks before the train comes, and every little sign of problems, people sell off and then they see it's all good, they go back to the train tracks. Now, could tariffs be inflationary, according to Tom Lee? Yes, they can. And could they stop the Fed from cutting a lot further this year? He agrees that this is indeed a risk that we all have to consider. However, even though this is an uncertainty that the market now has to deal with, the markets basically so far took this in stride. He basically says, look, we already knew this a long time ago. Tariffs are not a new thing. It's not new information that was inserted into the market out of the blue. The markets were introduced to the idea of tariffs, the uncertainty, the risk, and they ate it up like prime Mike Tyson eating up punches, basically absolutely shaking it off. So the market is unfazed by tariffs and all these fears and uncertainties, and nothing is going to change from this point on. If the market didn't collapse because of tariffs and the inflationary impact that they may have, so far, it's not going to happen. It's basically just a good boxer taking a punch, eating it, and just moving on, keep on trucking. Now, he's also saying that 2025 is not going to be a different year as far as performance than 2024 and 2023. And he says, look, folks, a lot of you are expecting a bad year because how long can this party continue, right? We had 2023, which was a phenomenal year. We had 2024, which was a phenomenal year. In 2025, it has to stop, right? And he says, no, not necessarily. We might have another very similar year to 2024. And he's basically saying that this indeed seems to be currently the case based on macroeconomic data, based on fundamentals. And the only thing that may stop this from happening is some unknown unknowns. Aliens invading, new wars starting, new supply chain issues. Something that we're not currently aware of may throw a monkey wrench into this, but as it stands, based on the current setup, there's nothing in the horizon to stop 2025 from being another great year for the market. Now, he's also talking about the fact that the weak sentiment, the humor survey, which shows that a lot of people are afraid about inflation all of a sudden, he says that's ludicrous. He actually doubled down on that on his private website, Fundstrat, and actually watched that clip as well, not just the CNBC clip, and he called it ludicrous. He says, look, it's the same people who 2 weeks ago, 3 weeks ago were saying that there's not going to be inflation. All of a sudden, they're now convinced that there will be massive inflation. And if you basically look at the breakdown between Democrats and Republicans, it's the Democrats who are freaking out about inflation because it's more of a political knee-jerk reaction to the fact that Donald Trump is in the White House. So they're convinced that the world is ending. And that's actually not the case. It's going to fizzle out and basically people will calm down. So it's basically a political overreaction, has nothing to do with actual inflation expectations. Now, of course, as I mentioned in the beginning of this video, he did talk about 3 industries to be in right now. Obviously, we have Bitcoin, which is not an industry, so let's put it to the sideline. But except Bitcoin, he talks about small caps, financial services, and industrials as the drivers of this market. And his argument is very interesting. He says, look, folks, the Max 7 are not going to have a bad year in 2025. By no means. They're going to have another good year if the market stays solid. However, the upside there has already kind of ran its course. A lot of what they're doing right now was already priced in by the great returns we've seen in 2024. So there's not a lot more room in the Max 7 to get exponential returns. However, when you look at small caps, financials, industrials, and even Bitcoin, the massive amounts of upside are still there, especially with small caps and financials because they haven't ran up as much. So there's more room. The Max 7 are not going to outperform the small caps and the financials and the industrials, according to Tom Lee, basically because those are lagging the Max 7 over the past 2 years. Especially if inflation indeed is falling like a rock, which is Tom Lee's opinion, position, whatever you want to call it. He's never changed on that. He's saying, look, inflation is falling like a rock. This tariff thing is just overblown. Now, what does he mean by overblown? I think it kind of assumes the same thing that I assumed, that this is a negotiation tactic that eventually Trump will back off once he gets what he wants. It's just Trump creating leverage. I don't think we're going to get a world where Trump just tariffs everything and that's his end game. I think the end game is to put the U.S. in a better negotiation tactic with trade agreements. That's why I think also this is overblown. He's also talking about the fact that if you look at how this year started so far, the year is set up for a great runway. The first 5 days were positive, which means, 82% of years that had the first 5 days positive were positive years. He's looking at the fact that inflation is getting softer. He's looking at the facts that, tariff fears are absolutely panic-based and overblown. Now, look, you can say that Tom Lee is a permeable, that he's always optimistic, he's overly optimistic, whatever you want. But he has been more right than wrong quite often for the better part of the past 2.5 years. And he's been the best performing analyst out of them all so far for the past 2.5 years as well, which means that his opinion counts. And until he screws up to the point where his opinion is no longer as relevant, we have to take seriously what he's saying. Does it mean we have to blindly follow Tom Lee into Bitcoin, small caps, financials, industrials, and just automatically buy whatever he says? No, of course not. Does it mean that the economy is guaranteed to have another great year in 2025 like he says? No, of course not. It's just an opinion by somebody who's very qualified and with great track record. Another thing to add to our inputs while we make our own decision. What we do here is we develop thinking people who formulate their decision and not blindly follow Tom Lee or Tom Nash on Dan Ives or whomever. So more data from Tom Lee. Now, I've promised you in the beginning of this video to also explain what are those 10 stocks Tom Lee is talking about. And by the way, right now, after the Palantir spike, it's actually the biggest stock, the biggest holding in his ETF, Granny. It has 3.27%. That is by far his biggest holding right now in his ETF. The second one is Nvidia. Then you have Palo Alto Network. Then you have Vernova. Then you have Oracle, Arista, Emerson, Costco, and then Netflix. Now, as far as what these picks mean, it's an individual question. It depends on you, your preferences. Obviously, you know my opinion about Palantir. I think Nvidia is another great company. I think Oracle is another great company. I've been talking about it for years. Arista is one of the companies I was bullish on back in 2023 when it was $35. It's currently 4 times higher, and we've made a killing on that stock. Costco, not really my style, but I really don't know nothing about it. Netflix is a company that went and flipped the script completely on everybody. A lot of work that can be done here by you if you take this list and you actually do the work. Instead of buying these 10 stocks, actually take each stock here, research, analyze, develop your own thesis about each stock, your own price target, your own valuation, intrinsic value, all that good stuff. And obviously, that's not the only top stocks list in the world. I mean, I have my own in my academy. Our top stock list have been outperforming the market massively over the past 3 years, but that's not the point. The point is, whatever list you want to work with, whether it's Tom Lee or the Tom Nash Academy, all of these lists are the first step. They're not the final destination. You don't buy stocks because somebody said they're a good buy. You take it, you research it, you develop your own intrinsic value, your own thesis, and then you make the purchases based on your brain, your decisions. Now, if you want to develop that skill, how to value, how to make smart decisions, how to become a better investor, I invite you to join our academy. Now, it was closed for about a week and a half. We hired a few people, we expanded, we're ready to accept 10 more students. So the academy will be open today for 10 more people today, slowly. So we're going to let in another 10 people. First come, first serve. And then we're going to do it again as we're able. Would love to see you there. Thank you so much. We're already up to 12,000 members in the academy. Absolutely mind-blowing. Thank you, guys. I'll see you there. Peace.